buyers are being a little bit more selective about what they're looking for. I would say recurring revenue, high quality retention, and margin visibility.
Hi, everyone. I'm PCT editor Brad Harbison, and welcome to a brand new podcast, Routes to Riches with Kemp Anderson. So in each episode of this podcast, I will interview Kemp Anderson and Grant Sinnott of Kemp Anderson Consulting about various aspects related to the business of pest control, from market trends to buyer issues to owner strategies and more. And the goal is to provide our listeners with important market updates and practical business solutions that they can use to fine-tune their operations. And so for our inaugural episode, Kemp and Grant are going to take a look at recent developments from Rollins, Rentokil, and Ecolab and possible 2026 implications. So Kemp and Grant, looking forward to this podcast. And I know, Kemp, before we get started, you had a couple important notes you wanted to open with.
Yeah, the first I want to say is thank you certainly to you and PCT and GIE. We're excited about this opportunity. These podcasts we want desperately to certainly deliver value. Some will be longer than others, some will be fairly short, and then some will be longer. Ultimately, we want to help the PCOs out there that will give us some time and listen to this. Regarding today, Brad, the first thing I want to say is that everything we're going to talk about today, certainly Rentokil and Rollins, Ecolab, publicly traded companies, they make a lot of news. They produce annual reports. They produce quarterly earnings calls. They have media with you and certainly other sources around the world. So what I want to stress to people today, today's podcast, the first one, will not be very, very long, but hopefully it'll be meaningful, very meaningful. And what we will discuss today, I really want to stress, is public information that we glean from looking at annual reports, listening to quarterly earnings calls, and reading the news as it pertains to our industry and these largest of the companies in our space. So very, very important to us that all of this information that we'll discuss today is public. The second thing I want to discuss, and maybe this helps listeners sort of put this in perspective, right? So it's March 2026. We've effectively finished 2025, although these numbers can be so big that not all the numbers are in yet. So just to put today's conversation in a quick perspective, if you will, I'm going to use 2024. In 2024, we had 12.27 billion in domestic revenue in the pest control industry. If we look at these three companies, Rentokil, 3.46 billion 2024 reported revenue, public information. Rollins, 3.38 billion, again, public information, publicly reported revenue 2024. In Ecolab, 805 million reported revenue for 2024. So if you add just those three numbers up, you get to 7.5 billion. Just those three. So that means that those three companies are roughly 61% of the domestic industry revenue. And that's leaving on the side. We're just leaving on the side very, very large privately held companies like Arrow, which we know is over 300, like Massey, over 300 million. And if we added up all of the private equity out there, that's private, so we could sort of swag at that and say, maybe that's $1 billion, $1.5 billion, give or take, maybe even a little bit more. But when you look at these three companies, Rentokil, Rollins, and Ecolab, you're at 61% of our domestic revenue. So what we thought today, and I'm going to tee it up and hand it over to you and Grant, but as we look at these three companies, they're the biggest domestically. We should pay attention to what are they doing? Why are they doing it? We should pay attention to what do they value? What are we listening? What are we hearing on these quarterly reports? What are we hearing on these annual reports? And so what we tried to do today is say, if it's important to the biggest service providers in the country, maybe there's things there that we can all learn from and that should also be important to us. And so that's really what we're going to try to pull out today, kind of quickly, is just say, what are we seeing and what does it mean? What are we seeing from these big, very big companies in our space that dominate, and what should it mean to the PCOs? So with that, I may jump in a time or two, but with that, I'm gonna turn it over to the two of you.
Yeah, Kemp, I think you hit on some good points there. And I know our staff right now, we're kind of putting the finishing touches on this year's top 100 list. And that's one of the things that we've tried to do is take a look at what some of the real larger companies in the industry are doing and, what kind of lessons can they share with other folks in the industry. And that is one thing great about the industry. Folks are so willing to share lessons learned, whether good or
Absolutely.
bad, with everybody else. So.
Yeah.
Uh, Grant, I want to start things off with you, and at a very high level, what can you tell us about what's happened in the pest control M&A market this past quarter? Is the market gaining momentum, slowing down, or staying fairly steady?
Yeah, thanks, Brad. I would say at like a really high level, the market is steady to gradually improving, maybe not overheated. Um, and the things that I'm looking at when I'm thinking of that is what are the major strategics doing? When we kind of read through their filings, Rollins is talking about a robust acquisition pipeline and healthy end market demand for 2025 and 2026. Rentokil says its deal pipeline into 2026 is healthy. Some deals in 2025 slipped into 2026 rather than disappeared. So what that kind of tells me is that the buyer appetite is there. What might feel a little different this quarter is it's not that the demand for deals isn't there, but buyers are being a little bit more selective about what they're looking for. I would say recurring revenue, high quality retention, and margin visibility. So the market is active, but it's being a little bit selective about the kinds of assets that it's seeking.
Yeah. And I know something that's always certainly on the mind of both the buyers and the sellers, valuations. What are
Yeah.
you seeing in the way of valuations right now? Are we up, down, or sideways?
Yeah, for quality pest assets, I
Mm.
would say sideways to modestly up. And I would not call this like a broad valuation expectation, but I do think premium assets are getting premium treatment. We've seen that in our deals, we see that in deals that have been publicly announced. And I mean, when we look at the success of the businesses that are kind of leading the industry, Rollins is guiding 7 to 8% organic growth in 2026, highlighting more than 80% of revenue coming from recurring and ancillary service lines. Rentokil is still buying and expanding its local branch and brand strategy. And I think those are signals that strategic buyers place a high value on durable recurring revenue, which is kind of what I mentioned previously. I would say on the flip side of that, businesses that are heavy one-time services that have lower retention and inconsistent margins, they might face a little bit more scrutiny because both Rollins and Rentokil flagged in their recent announcements that, weather and these one-time services have had a little bit of a softness issue. So I'd say there's a bit of a split in the market right now between those premium assets and those lower class assets and what you would expect in terms of a valuation expectation.
And Grant, one thing you said was interesting was, from the buyer's perspective, there's always a healthy appetite for good companies. So again, from that buyer's perspective, what matters most today when they're looking at pest control businesses?
Three things stand out to me as I read through filings and as we talk to people. And the first is recurring revenue quality. I mean, once again, Rollins explicitly emphasizes over and over again the strength of their recurring and ancillary base, with over 80% of that representing total revenue volume. I would say second is customer retention. You don't want to pay to have to acquire a customer and have all of those recurring marketing expenses. Rentokil highlighted improving customer retention, pricing discipline, and branch density in their most recent reports throughout North America. And I would say the third is a margin path or operational leverage. So how profitable are you? If you're making $1 in revenue, how much of that is falling to the bottom line? And if we look at Ecolab, their pest elimination results show buyers still care about operational efficiency because margin improvement was dramatic recently. So if I'm a buyer today, I'm paying close attention to how sticky is the customer base of my targets? What are their retention look like of the business? Do they have strong pricing power? Can they price above or below market wherever they are? And whether the business can really scale their margins without sacrificing service quality.
I would jump in and add one other thing that I think is key. And when we talk about retention of customers, is also these three companies in particular, Rollins, Rentokil, and Ecolab, and certainly other big strategic buyers, also very much focused on employee retention and culture and making sure that whoever they're buying is a fit. And part of your question was about this quarter. And today, I think, was the announcement of Arrow buying Hoffman's with over 100 employees. And I can assure you that when Arrow looks at any sort of acquisition, they are certainly looking at culture, and they're certainly looking at not just customer retention, but employee retention, which is key, right? Typically what you see, by the way, is when employee retention is a roller coaster or low, then you see that ripple effect into customer retention as well. So I would add culture and employee retention to that.
Absolutely.
Yeah, absolutely. And I know that, like you guys, a lot of our readers are really interested in those reports that come from the publicly traded companies. And want to dive into that a little bit. What signals from the public companies should pest control owners be paying attention to right now as we sort of look ahead towards the next 12 to 24 months?
Yeah, a couple of things come to mind right away is growth. So what am I growing at? What is the market growing at? I talked about Rollins growing at 7 to 8% organic growth. So their internal customer base, not just through acquisitions, which is a strong signal for the underlying health of the pest control market. And the second thing I would look at is, North America recovery at Rentokil Terminix. You can see their organic growth improved to 2.6% in Q4 after weaker growth earlier in the year. And if that continues improving, it could make strategics more confident and more aggressive. The third is their aggressiveness and how much are they spending on M&A? Do they see this as a value creation opportunity? Rentokil spent about 120 million on acquisitions in 2025, according to their filing, but around 200 million in 2026 is what's slotted, while Rollins invested a couple hundred million in acquisitions last year. If these dollars are getting deployed, I think that's a real market signals for listeners. And then I think the fourth is pricing versus volume. Rentokil noted pricing remained encouraging, while Rollins suggested softness and one-time services. They thought that might be transitory. This means the market still appears to be able to take the price and the price increases, but buyers will want to understand whether growth is driven by pricing. So are you just getting the growth through increasing your prices, or are you able to actually increase the number of customers that you have? So more of a volume driven approach. And then the fifth, is margin expansion through technology. Everybody's talking about AI and operating discipline. Rentokil is pushing and talking about AI agents, multi-brand marketing, and definitely brand density or, like branch density. While Ecolab is showing strong digital growth and margin improvements in pest elimination as we look at kind of the reports that are coming out of there. I think that suggests for 2026 that buyers may pay more for businesses that already have operationally mature and digitally capable businesses. I think those are things that people are going to want to see more and more heading into the couple of next years.
And 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 Grant, you touched on this, and I would agree with all of that and stress to people that are out there listening that all the buyers, if you're going to engage in selling your pest control business with either of the three that we're talking about today or the others, like, again, a private equity or Massey or Arrow or some of the others out there, at the end of the day, one of the questions that they are always going to ask is, tell me about your price increase strategy. And they want to hear that it's annual because they do it annually. And if the company selling does not raise prices, then it makes it very difficult for the company that is buying to raise prices. And you'll see that reflected in offers. So it's very important. I want to stress that one of the things that you're definitely hearing is price increases matter, especially when you think about some of the things in today's economy. Price increases matter, and you'll get rewarded for that from the buyer if that is part of your ongoing strategy.
Absolutely.
And they'll see it in the margin, and again, reward you for that. So it's
Yeah.
really there's really no reason not to raise prices.
Yeah, absolutely. And again, Kemp and Grant, I know looking at these three companies, Rollins, Rentokil, and Ecolab, what early signs are you watching that could shape the market as we head further into 2026?
I, I think I'm looking at how much are they growing? What do their margins look like? I'm comparing that to my business at home, and I'm thinking about kind of what are my long-term strategies, and are they adopting certain technologies? Are they starting to implement certain policies? And I'm thinking about, does that make sense for me to do? Is that something that I can do? So I'm not always mimicking, but I'm just using that as well. If their organic growth is 7 to 8%, I should probably trying to target or beat that because I'm smaller and I'm more nimble and I can implement the changes quicker. So I think it's just a good way to benchmark yourself against the market and say, okay, I'm in the zone, or okay, I need to figure out what I'm doing wrong or doing right.
Yeah. And then, Kemp, to kind of close out our podcast, what's one action that pest control owners should take this year to better position their business?
Uh, Man, one is tough to say, but I would certainly say you definitely want to focus on recurring revenue. You want to focus on selling recurring revenue, and you want to focus on retaining it. And that is absolutely what the buyers are looking at among these other subjects that we've discussed. Uh, the recurring revenue is huge, without a doubt. Retention of customers and employees is always a part of that. And I know I'm going beyond the one that you asked, Brad,
Yeah.
but as you look at the pricing discipline is huge to sort of sum all this up, and all these things cascade into the bottom line. Um, and the bottom line absolutely matters. I think a lot of people in our space sometimes get lost in the fact that they'll say, my revenue is X, and revenue is important without a doubt. But all these things we're talking about, employee retention, customer retention, margin, price increases, all these things play into that revenue. And these are the things that the buyers are going to look at. And certainly these three companies that we're talking about look at. Um, if 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 we were to say to the listeners out there that own pest control companies, what things can you focus on near term in today's environment? I would certainly say make sure that the data that you use to run your company, whether it's whatever customer software package that you use out there, and there's some great ones in our industry, or QuickBooks, or your accountant, whoever's doing managing your customer database and whoever's managing your financials, make sure all that is always as clean as it can be. Certainly, always focus on retention. I think that's goes without saying, customer and employee. Again, I want to stress. Um, you want to document not just price increases and say, yeah, we have a price increase every year, but what is it? When is it? Who is it? Is it on new customers, recurring by category, what month, and how much? So there's a lot to track and understand and learn on price increases. And there's certainly a lot of different strategies that you can use for that. And then I think the last little nugget, and I know I'm way past the one piece that you asked for, is focus on route density too. Again, that drives margin, efficiency, and a whole bunch of other things. So I think at the end of the day, really what you want to be able to study is you look at these big publicly traded companies is what are they doing? Should I be doing that? And that's a great question to ask yourself. Do I understand what they're doing? Why do these players always increase prices? Why do they seemingly always have a revenue increase? Why is their margin so stable? Understanding these things help you run a better business at a smaller local scale, but ultimately it makes your business more valuable. And so there's a lot to learn, I think, as we look at these three. And again, we're 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 focused on these three. But again, there's, arrows out there and Massey and private equity. So there's a lot of others out there, but they're private, so they're a little harder to gather that information and really digest it and understand it and try to deploy that on a local level. So I know that's a broader answer than the question that you asked, but
Yeah.
hopefully that was okay.
Yeah, really great discussions. Again, taking a look at some of the big three, and also, as you said, Kemp, some of the other big companies and what they're doing, what other pest control companies can learn from them, and again, possible implications for the rest of 2026. So, thanks again to you and Grant for joining me today.
Awesome.
Thank you.
Thank you so much, Brad. Appreciate your time.
Yeah. And again, thanks to our listeners for joining us for the inaugural episode of Routes to Riches with Kemp Anderson. So we look forward to having you back for upcoming episodes as we continue exploring the trends, strategies, and opportunities that are shaping the pest control industry. Thanks, everyone.